Hello again, everyone. This is Joe Henches with Beyond the Chart, helping you become a better trader. Welcome back. This is the weekend market analysis, actually the abbreviated version. And we're going to get into a couple looking at the New York Composite today on a weekly and monthly basis. And one of our key indicators, a couple of the key ETFs, and then two stocks today, Expedia and SolarCity. All right, but first I've got a quick announcement. Just wanted to let you know that over on the website, just click on this link and you can visit the website. And I've got a bonus that I'm running on my insider membership, and that bonus is a pretty big bonus, and it's for founding members actually, and that's going to expire Thursday night, the 5th at midnight. So I just want to make sure you're aware of that. It goes away midnight on the 5th. So check it out, and would love to see you become an insider member. You get to actually look at my analysis of a whole lot more, my Elliott wave count, all of the indicators, all of the indices, all of the ETFs, trade ideas, the whole shebang. So check it out. All right, let's take a look here at the New York Composite. And the, let's see, the pullback here, the New York was down 37 on Friday. And we've pulled back. This is all part of this October rally that we've had, a big counter trend rally. And really, we shouldn't be too surprised given how hard a down move we had in August and in the last week or two of last week, actually, of September. So, we're getting this tremendous bounce back here. Let's look to see exactly what the retracement has been here on the New York Composite. And let's take a look here. It's not quite 61.8%, so it's in that zone, okay? And we've pulled back. We didn't get a reversal bar. It kind of looks that way, but I would have liked to have seen it on the New York Composite to be higher than where it was on Wednesday. But on the S&P 500 and the Dow, we are getting reversal bars. So, the market really took a hit in the last 30 minutes, and they kind of slammed it down. So we're going to see how much further we've got in terms of any kind of power. We've really pulled back to this neckline, this extended neckline. I've extended it out to the right here. And you can see this was the head and shoulders top. Let's take a look at the weekly chart and see what that's looking like. Here's the weekly view, and you can see now, let me zoom back out. We're going to see all the way back to, the 2009 low. You can see this trend line, this entire move that it's been in. It's pretty much broken down out of that. We on the move out of August, we went to a lower low from the October 2014 low. So this in the New York Composite, I believe, is telling a more accurate story of the stock market because it is a broader indice. It's like 5 times as broad as the S&P 500. It's like 2,500 stocks or something, or 2,600 stocks in the NYSE Composite Index. And, the Russell 2000's got 2,000. So those two are the weakest of the 5 indices I look at. The Dow, the S&P, the NASDAQ, and then these two. Today we're just focusing on the New York Composite. So here's the weekly, and basically ended up being a doji bar right at this pullback in here. I got this dotted line. I don't want to confuse you. I was looking at something else with that. Let me take that out for the moment. All right, let's take a look at the monthly chart. On a monthly basis, we've got a moving average cross here. The 10-week is crossing below the 21-week. And that's a 10-week exponential that I use in here. It's crossing below. Now, the last time it did that was back here in 2012. But you can see the 21 was rising a lot more than what it was doing here. And the other thing that I've noticed too is, see how this, it's like, I don't think this went to a lower low, 64.14. No, it did not. So, it was a series of higher highs on these pullbacks. But notice how, as I just mentioned, we took out the October 14th low. So we go to a lower low and we get this cross. Very similar to what happened back up here. In 2008, January 2008, we take out the August low in 2007, and then we get the moving average cross in here, and then that was all she wrote. Now, the wave count I've got on the big picture here, I believe that the the Elliott wave cycle wave 5 is completed, and on the New York Composite wave count is different than the Dow Jones Industrial wave count. It's acting differently. The Dow on this wave, I don't call it a wave B. I actually think the Dow is finalizing and completing the whole structure right now, or it did in May. Okay, I think it topped out in May. But right for the New York Composite, I believe it topped out back here in October 2007. And this was a cycle wave and the super cycle wave 5 that completed at that point. And then we got a swift A move down, and now we're getting this counter trendish B, which the trend line for that has broken, and now we're rolling over. And so, I just talked about the moving average break, and if you go back and look at in 2000, you got the same thing that happened with the moving average crossover, and then the break down below and a series of thrusts down. Now let's go ahead and take a look at the McClellan oscillator. So I'm going to go back and take a look at the New York Composite and some of the indicators. Here's another reason why I think this thing is really maybe about ready to break. And we're getting divergence in here on the RSI, with this last several week move up on the New York Composite not confirmed by the RSI, not confirmed by DI+, and it is not confirmed by the McClellan oscillator. And so I'm just really looking for this thing to start to roll on over and head south. So that's what I'm expecting, and we'll just continue to watch and look to see if that happens. Let's take a look at United States oil real quick. Oil got a little fake out, trapping the bears here, pull back up into here, and we're right at the midpoint of this congestion, and that's at 15 on USO. To me, we break above USO, it's probably going to go the other direction and probably going to pop out the other and head north. That's what I'm looking for on USO. And semiconductors, I wanted to take a look at that. Semiconductors, I believe we have 5 waves down from the peak in SMH. Peak was June 1. We have 5 waves down here. You can see again, it took out the October low, 2014. And then we've had a 3-wave rally back. It's rallied back to 78.6%, just shy of that. And actually the other thing that I was going to point out is that here is A. So let's say A, B, C. It turns out that at this point right here, C is almost exactly equal to A. So in this zigzag correction, correcting deep like a wave 2, this looks like the start of wave 3, and that's what I'm looking for to come on down. Now we do have 2 closes below the 10-day moving average, and so if we get a break below the low of Thursday, I'm going to be looking for some continuation to the downside and for this thing to start to accelerate. All right, let's take a look at 2 stocks. Expedia. Earnings, they were really happy with Expedia on Friday after the earnings on Thursday night, and exploded up here. Now my caution is I had this as an ending diagonal in here. This could be nothing more than a throw over, and especially since it looks like a reversal bar, but it's a doji, exactly what we had here, exactly what we had here. Okay, and the other thing that's happening with those is tremendous volume right here that happened, and it was 3 days below that, before that doji. This one happened 2 days before the doji, and this one is happening on the doji, and it's the same kind of volume that you had right before this peak. So and the indicators, yeah, it went above this point here, but it the RSI did not get taken out from this point here. So we're getting some divergence over, say, a 6-week period kind of thing. So I would be very careful on Expedia. I'm really going to be watching to see if that collapses down. And SolarCity down 22% at one point. Actually, I think it was down 25%. It was down 8.4. And I had put this out early in the morning, I believe, a chart of this. And this is my corrective channel that it was pulling back through, and wasn't sure if it was going to catch it at the bottom of the channel or not, but look where it caught, right into this support zone. Okay, here's wave 4, the bottom right here. So it looks like it has the potential to catch at the bottom here, wave 4. Where is that? That is 28.4, call it 28.38. and the low on Friday was 28.11. All right, so I'm looking for support to come in here, but I would not be trying to catch a falling, a falling knife in here. Just going to watch and see if it'll start to turn, and see if you can get some footing in here for it to come back up. But a lot of damage done in here on SolarCity. All right, that's it for today. Hope you found that helpful. Head on over to the website, check it out, and would love to have you as an insider member. Everyone have a great weekend, and watch out for those trick-or-treaters.